Good afternoon, ladies and gentlemen. My name is Phoebe Gibbons and I'm the General Counsel for the group. A warm welcome to shareholders and guests present both in person and online today at the 2024 Annual General Meeting of Heartland Group Holdings Limited. It is our pleasure to be in Auckland with a fantastic view of Rangitoto Island for this hybrid annual meeting. For those in the room, to ensure your experience at the Hyundai Marine Sports Centre is both memorable and safe, we would like to make you aware of the following. Bathrooms are located on the first floor on the landing just opposite this room. In the unlikely event of an emergency, please remain calm and leave the room immediately through the fire exit doors and down the internal or external stairwell. A fire warden will clear the room. If you need assistance getting down the stairs, an evac chair is located in the kitchen to my left. The evacuation point is located in the car park behind the building. A defibrillator and first aid kit are located in reception between the windows and the front doors downstairs. There are staff on site with first aid training. Smoking, including vaping, is permitted only in the eastern side of the car park away from the building. Finally, as a courtesy to everyone present, please ensure your phone is now switched to silent. For those joining the meeting in person today, we welcome you to please join the board and management for light refreshments after the meeting until 4:30 p.m, at which time we will need to clear the room for the next function. For those joining online, I will shortly provide you with instructions on how to vote and ask questions. If you encounter any issues, please refer to the virtual annual meeting online portal guide or phone the helpline on 0800 200 220. Since a quorum is present, I declare the meeting open. I will now outline the agenda for business for today's meeting. I will shortly introduce you to the Board of Directors and the Chief Executive Officers of Heartland Group Holdings Limited, Heartland Bank Limited, and Heartland Bank Australia Limited, who are joining us in person today. I will then take you through the formalities of the meeting before inviting Greg Tomlinson, Chair of the Heartland Group Holdings Limited Board, to chair the meeting and provide a high-level overview of Heartland's performance and activities in the 2024 financial year and its focus moving forward. This will be followed by an address from Heartland Group's Chief Executive Officer, Andrew Dixon, who will provide you with an update on Heartland Group's strategic objectives. This will then be followed by an address from each of Heartland Bank New Zealand and Heartland Bank Australia's Chief Executive Officers, Leanne Lazarus and Michelle Windsor. This is a slight change to the agenda that was set out in the notice of meeting, but the chairs of each bank are here today and are available to answer any questions you may have. Following this, there will be an opportunity to answer any questions about Heartland's performance, strategy and operations. I encourage shareholders attending online to begin to submit their questions now, if they have not already done so. We will answer as many as we can at the appropriate time. Thereafter, we will move to the formal business of the meeting, including voting on the resolutions posed to you today. I would now like to introduce the Directors and Chief Executive Officers. I'll introduce each Director and Chief Executive Officer in the order they sit on the stage. Greg Tomlinson, our Chair of the Heartland Group Board. Greg was appointed a Director of Heartland in March 2013 and was appointed Chair of the Heartland Group Board in February 2023. Andrew Dixon. Andrew was appointed Chief Executive Officer of Heartland Group on 1 October 2024. Prior to this, Andrew was Heartland Group's Chief Financial Officer and has been with the business for 14 years. On 1 October, Andrew was also appointed to the Heartland Bank Board. Kate Mitchell. Kate was appointed as a Director of Heartland Group in October 2021. Kate is also a Director of Heartland Bank. John Harvey. John has been a Director of Heartland Bank since its establishment in 2011 and was appointed to the Heartland Group Board in April 2024. Simon Beckett. Simon was appointed as a Director of Heartland Group in June 2024. Rob Bell. Rob was appointed as a Director of the Heartland Group in June 2024. Bruce Irvine. Bruce is the Chair of the Heartland Bank Board, where he has been a Director since its establishment in 2011. Bruce is also a Director on the Heartland Bank Australia Board. Leanne Lazarus. Leanne was appointed Chief Executive Officer of Heartland Bank New Zealand in August 2022. Leanne is also a Director on the Heartland Bank Australia Board. Jeff Summerhays. Jeff was appointed Chair of the Heartland Bank Australia Board on its establishment in April 2024. Jeff had previously been a Director on the Heartland Group Holdings Limited Board. Michelle Windsor. Michelle was appointed Chief Executive Officer of Heartland Bank Australia in July 2024. Also joining us today is Nicola Foley, our Group Head of Communications, who will be looking after the online questions. Returning now to the business of the meeting, I advise that all valid proxies and postal votes received from shareholders within the prescribed time limits have been admitted. I can confirm that a total of 788 proxies and postal votes have been accepted. This represents some 335,059,738 shares, or 35.7% of the total issued shares in Heartland Group. I can say that for all resolutions before us today, approximately 81% of these proxy and postal votes are in favour. I would now like to outline the meeting procedures. This is a meeting of Heartland Group Holdings Limited shareholders. Accordingly, our guests are very welcome to witness the proceedings of the meeting, but participation in shareholder discussion and the business of the meeting is confined to ordinary shareholders present in person, online, by proxy or by authorised representative. Regarding the voting procedures for today's meeting, all resolutions will be decided by way of a poll. This is in line with the practice increasingly adopted by listed companies and is the preferred method of the NZX and the New Zealand Shareholders Association. By having resolutions decided by way of a poll, we are counting all postal votes, proxy votes, votes online, and votes on the floor. Each resolution will be put to the meeting. Shareholders joining us in the room should have received a voting card on registration. You will need to keep your voting card with all resolutions until they have been voted on. Our share register, MUFG Corporate Markets, previously known as Link Market Services, will then move through the room with ballot boxes and collect all the voting cards. If you need to leave before the conclusion of the meeting, you may place your voting card in one of the ballot boxes at the exit with an MUFG Corporate Markets staff member. For shareholders attending the meeting online, when your online registration is validated, you will receive an electronic voting card which you can use to cast your vote. To vote, you will need to click Get Voting Card within the online meeting platform. You will be asked to enter your shareholder or proxy number to validate. Please then mark your voting card in the way you wish to vote by clicking For, Against or Abstain on the voting card. Once you have made your selection, click Submit Vote on the bottom of the card to lodge your vote. Please refer to the virtual meeting guide or the online portal or phone the helpline on 0800 200 220 if you require assistance. Voting will remain open for 5 minutes after the conclusion of the meeting. The notice calling this annual general meeting was published electronically on the 30th of September 2024, with hard copies subsequently sent to shareholders who requested a copy. The notice outlined the formal business for this meeting and also provided background information on each resolution to be voted on. The minutes of the last annual general meeting held on the 9th of October 2023 have been approved and confirmed by directors, as is our custom. A digital version is also available on Heartland's website at heartlandgroup.info. I will now invite Heartland Group Board Chair Greg Tomlinson to address you. Following addresses by Andrew Dixon, Leanne Lazarus and Michelle Windsor, we will then move to the shareholder discussion, which Greg as our chair will facilitate. We invite online questions to be submitted now to allow us to answer these at that time. Thank you. I now ask Greg to come forward and speak with you.
Thank you, Phoebe. Good afternoon, ladies and gentlemen, and thank you for joining us today. This is no doubt that FY24 was challenging and Heartland's financial results was not as strong as we would have liked. However, in the context of a weak economy, Heartland's net profit after tax of $74.5 million or $102.7 million on an underlying basis was solid. The same can be said for receivables. which were up 6.4%. This is a testament to Heartland's best or only product strategy. In FY24, Heartland also met some key strategic milestones, which have helped to pave the way for the next phase of our evolution as a banking group. Notably, the acquisition of Challenger Bank on 30th of April saw Heartland Bank become the first New Zealand bank to buy an Australian bank. Importantly, though, we acknowledge that key metrics essential to shareholders' return need improvement. Our share price has not performed well in more recent times, and return on equity has decreased to 6.6% or 9.8% on an underlying basis. We're focused on fixing this. While the recent capital raise to fund the Challenger Bank acquisition has had an impact on earnings per share, it was a necessary part of our expansion into Australia and critical to enhancing Heartland's long-term value proposition. We greatly appreciate and acknowledge the significant level of support and investment from shareholders during the capital raise. We were pleased to raise $210 million to successfully purchase Challenger Bank and support further growth and capital requirements across the group. We're taking a prudent approach to capital and expect to continue to fund our business through organic capital generation. At this stage, we do not currently expect to seek additional capital from the market unless we identify a growth opportunity that is sensible and beneficial for shareholders. In this respect, the resolution seeking shareholder approval to ratify placement capacity is to preserve optionality. Regarding dividends, in September we paid a final dividend of 3 cents per share, bringing the total dividend for FY24 to 7 cents per share. The total dividend payout ratio for FY24 was 55% of underlying net profit after tax and takes into consideration the recent capital raise, the acquisition of Challenger Bank and associated growth opportunities. We expect to target a similar dividend payout ratio in FY25. The board will continue to actively manage dividend settings and carefully consider the declaration of any dividends, subject to maintaining a prudent level of capital for its needs while having regard to return on equity, accretive growth opportunities and financial performance. The year ahead will see a transformation of the business as we set ourselves up for long-term success. At FY25, we are focused on ensuring the right foundations are in place to deliver growth and enhance shareholder return. Since becoming the ultimate parent company of 2 banks and 2 jurisdictions, Heartland's role has evolved. Its operations are now focused on group strategy, investor relations, corporate finance, capital allocation, and strategic and risk management oversight of each bank. Ultimately, Heartland will be focused on improving shareholder return. Andrew will discuss this in more detail. New Zealand's focus is on simplification and efficiency, keeping our business simple and focusing on the markets and asset classes which allow us to be the best or only at what we do. Leanne will expand on this shortly. In Australia, we now have a secure position and a greater opportunity to meet the growth potential in this market. Growth which we can now fund ourselves through retail deposits. as Heartland Bank Australia continues to establish itself in better new ways of working. Structural and process efficiencies will increase the bank's capacity to do more. Michelle will share more on this in her address. All of which is expected to continue towards our FY28 ambitions as a group. Looking towards the end of FY25, as the New Zealand and Australian economies improve, we expect this to have a positive effect on lending performance. However, the volatility we experienced in FY24 has continued in the markets we operate in and continues to create too much uncertainty to provide an accurate underlying net profit after tax guidance range for FY25. We will revisit our ability to provide guidance as the financial year progresses. With that said, under Andrew, Leanne and Michelle's leadership, the board is confident in Heartland's ability to execute against its best or only strategy and deliver enhanced value to customers and shareholders. Moving to the board and management updates. This year saw several changes, largely as a result of the Australasian Bank acquisition. On 30th of April, we were pleased to appoint a highly skilled board to lead Heartland Bank Australia. The board is chaired by Jeff Summerhayes and has a strong level of independence and regulatory knowledge to drive our strategy for expansion in Australia. Following Ali Comerford's resignation from the Heartland Group board in June, we were pleased to strengthen the board's Australian capability with the appointments of Rob Bell and Simon Beckett. In addition to their Australian banking expertise, Rob and Simon bring skill sets which complement the group's best or only strategy. This includes Rob's experience in digital banking, technology and growth strategy, and Simon's motor finance experience. On 30th of April, John Harvey was also appointed to the Heartland Group board. He remains on the Heartland Bank board. On the 22nd of July, we welcomed Michelle Windsor to the role of CEO of Heartland Bank Australia. Michelle has made great progress in bringing the three Australian businesses together in very quick time in a highly regulated market. Michelle will speak to this in more detail soon. After 15 years with Heartland and its predecessors on 30th of September, Jeff Greenslade retired from his role as Chief Executive Officer of Heartland and from all his Heartland directorships. As one of Heartland's founders, Jeff's contribution to the business and our shareholders has been outstanding, as I'm sure you'll all agree. On the 1st of October, the board was pleased to appoint Andrew Dixon as Chief Executive Officer of Heartland Group. The board is confident in Andrew's ability to lead Heartland in the next stage of its journey, focused on capital allocation and an improved return on equity. As announced in September, Andrew's previous role of Group Chief Financial Officer will not be replaced, and the Deputy Group CEO role has been disestablished. This means Chris Flood will finish with Heartland on the 31st of October. As many of our shareholders will be familiar, Chris first joined Heartland through a predecessor entity in 1997 and has held a number of senior management positions at Heartland. This included as Chief Executive Officer of Heartland Bank before he was appointed Deputy Group CEO in August 2022. On behalf of the board, I would like to express our sincere thanks to Chris for his significant contribution to Heartland and acknowledge the value he has created for our shareholders. We wish him all the best in his next endeavours. I wish to conclude my address this afternoon by expressing my sincere thanks and gratitude to our shareholders. We appreciate the confidence you have placed in us and are committed to delivering enhanced shareholder returns. This is something which we take very seriously. Thank you also to my fellow directors for their wise counsel and the management team who continue to provide strong leadership to Heartland. On behalf of the board and management, I wish to thank Heartland's employees for their hard work and dedication to our customers. Thank you once again. I will ask Andrew Dixon to address you all. Thank you.
Well, good afternoon and welcome all. I would like to thank our shareholders, boards, management teams and employees for their ongoing support of Heartland, which has enabled the achievement of several strategic milestones amidst a backdrop of challenging economic conditions. We are now well positioned to capitalise on opportunities in our chosen markets as economic recovery progresses. I'm extremely honoured in the board's faith in appointing me as Heartland Group CEO. I've been with Heartland for more than 14 years in various roles, including for the past 4 years as Group Chief Financial Officer. In my time at Heartland, I've been fortunate to have been part of each significant building block of the business, including the initial merger in 2011, New Zealand Bank registration in 2012, and Heartland listing on the NZX and ASX. I've also been involved in the execution of every major strategic acquisition, including the reverse mortgage business in 2014, Stockco Australia in 2022, and most recently Challenger Bank, now Heartland Bank Australia, this year. As Greg described, Heartland's role as the parent company of two banks has evolved. With it, the role of CEO has changed and is different to that previously held. We now have two specialist banks with their own boards, exceptional teams led by great leaders in Leanne Lazarus and Michelle Windsor, respectively. Heartland's role as the listed parent will encompass broader group strategy, corporate finance, investor relations, capital allocation, and strategic and risk management oversight of each bank. As the interface between our internal businesses and the external market, the fundamental purpose of Heartland is to maximise shareholder value. My immediate focus, therefore, is addressing Heartland's return on equity, and in doing so, ensuring that capital is allocated to the parts of our business that generate strong returns. This discipline is paramount in an environment of standardised prescriptive capital requirements. Capital is one of our most precious resources, and it must be utilised efficiently. The successful completion of two capital raises during the past 2 years has enabled key strategic acquisitions in Stockco, our Australian livestock finance business, and Heartland Bank Australia. This, alongside our existing reverse mortgage businesses, has set a solid foundation from which to achieve our long-term ambitions. As acknowledged by Greg, we appreciate the support and patience shown by our shareholders in completing these acquisitions. Despite the tough trading conditions the business has experienced, we remain positive about the livestock market recovery, in-train product and distribution initiatives, and the successful transition of our Australian funding base from purely wholesale to around 90% deposits by the end of FY25, which will provide a strong margin uplift and unlock growth opportunities. Our reverse mortgage businesses remain well positioned as product and service leaders in their respective markets. We expect demand to continue for reverse mortgages, supported by a growing demographic need. We are committed to being the retirement finance provider of choice and plan to grow the market and secure more of it with a broader product offering and enhanced distribution network. A key part of simplifying our business and improving return on equity is the reallocation of capital from assets we have identified as non-strategic. These are a pool of assets that Heartland Bank in New Zealand has accumulated over time during its journey to date. As the business has matured, these are no longer a strategic fit for the organisation and do not contribute positively to Heartland Bank's return on equity. The total value of these assets at 30 June 2024 was $217.8 million, and that's out of a total asset base of $9.3 billion. We have commenced development of realisation strategies and will report on these assets separately in FY25 to provide greater transparency. This will allow underlying capital to be redeployed to support value-accretive growth within Heartland Bank. While we remain cautious in the near term, we expect growth in core lending to return and asset quality metrics to stabilise as economic recovery progresses during FY25. We are already experiencing an improvement in our net interest margin, and these factors will support our FY28 ambitions as we enter FY26. Our stated FY28 ambition is for the group to deliver a return on equity between 12 to 14%, while achieving a net profit after tax of $200 million. The pathway to achieving this is through simplification and product excellence. We will continue to be different, enable better lives for New Zealanders and Australians through our specialist banking products, and to continue to make things easier for our people and customers. Achieving this ambition will involve, firstly, 10% per annum receivables growth in our core lending products. Secondly, returning net interest margin above 4% through a focus on bester-only products. Cost containment through automation, leading to an improved cost-to-income ratio. We are targeting that to be less than 35%. And finally, an efficient assessment of credit management of arrears and collections and recoveries to maintain high asset quality and improve our impairment expense ratio. In conclusion, our fundamental purpose is to maximise shareholder value. This means ensuring activity is driven toward value-accretive outcomes, measured by return on equity. To do this, we must focus on where capital is deployed and how efficiently it is utilised. I'm now pleased to hand firstly to Leanne Lazarus, followed by Michelle Windsor, to provide updates on our respective New Zealand and Australian bank strategies.
Kia ora koutou. Hello, everyone. As noted by Greg, financial year 24 was challenging economically. For the New Zealand Bank, while reverse mortgages continued to perform extremely well, we saw a reduced level of growth from what we typically see in our motor finance and asset finance portfolios. Buying or upgrading to a new car was deprioritised for many New Zealanders. This was clear as total new and used car sales by dealers in the New Zealand market was down by 12.7%. In comparison, Heartland Bank's motor finance portfolio saw growth of 3.8%. Similarly, in asset finance, high interest rates and difficult trading conditions meant lower margin loans continued to take longer to roll off, as customers took longer to refinance assets. This portfolio still saw pleasing growth of 8%. As customers responded to the challenging environment, we did see a deterioration in non-performing loans within motor finance and asset finance, and an increase in provisions. We spoke about this in detail within our full year results announcement in August and described the May and June deterioration in domestic economic conditions and the impact this had on additional specific and collective provisions. The recent reduction in the rate of inflation and the associated fall in the official cash rate signals a positive change for the New Zealand economy. While this is encouraging, the projected unemployment rate and the lag between interest rates and business outcomes does mean we expect to see some volatility to continue through to financial year 25 for the New Zealand Bank. Our ongoing investment in operational process efficiency and systems automation is having a positive effect on arrears management, while we continue to support our customers through the last stage of this economic downturn. We have been diligently ensuring the fundamentals are in place to restore growth when the economy turns. We're doing this through our process automation and digital programs of work and through simplification, which I will discuss shortly. Strategically, we are incredibly proud of what we achieved in the last year. We completed the upgrade of our core banking system. This was a multi-year investment and now really sets us up for success in terms of our ability to continue to effectively service our customers and improve our digitalization efforts. We also became the first New Zealand bank to acquire an Australian bank. With this privilege comes a greater responsibility to ensure integration and oversight of Heartland Banking Group, including Heartland Bank Australia and its subsidiaries. Greg and Andrew have both discussed the evolution of the group following this milestone acquisition. This requires a change in the way we do things across all entities, ensuring we have the foundations in place to achieve our strategic ambitions. In New Zealand, we are focused on simplification and efficiency. By simplifying the New Zealand business, we intend to accelerate growth in our strategic core lending portfolios and generate a better return. This is about enabling us to focus on the portfolios that we know have a good return and will allow us to restore profitability. Business and rural lending receivables made up of about 190 million of the 217 million of non-strategic assets as at the 30th of June this year. Our strategy to manage these loans is to sell or run down these portfolios over a responsible period. Expanding our margin and cost reduction are two other key areas of focus for the New Zealand Bank in financial year 25. We have started to see an improvement in our net interest margin, and this was at the end of financial year 24. Our exit margin, the margin as at the 30th of June, was 3.92%. By the end of financial year 25, we expect our net interest margin to be at around 4%. We are confident we'll get there through a number of measures. Our active management of non-strategic assets and increasing our focus on core lending will contribute to this, as will continued improvement in our fixed-rate portfolios, mostly motor finance and asset finance, and cost of funds benefits as interest rates reduce further. On costs, while we do expect our cost-to-income ratio to increase in financial year 25, we have a clear strategy and plan in place to reduce costs through our digitalization initiatives and through some structural efficiencies. Our aim is to extend our best or only strategy to our cost-to-income ratio and become the lowest cost provider for the products we offer. Heartland Bank has a long history of helping New Zealanders with their finances and in doing things differently. We have proven there is strength in our best or only strategy and in the addressable markets that we operate in. A recent research paper funded by the Retirement Commission reported that about 25% of New Zealand households have low retirement income and limited options to access liquid wealth, but hold substantial equity in the owner-occupied homes. We are proud to offer reverse mortgages as a financial solution for this audience and our aging population. Most households need a vehicle which we can support access through motor finance. We also have a growing opportunity within New Zealand's infrastructure and agricultural sectors to provide specialised lending solutions through our asset finance and livestock products. As we simplify our business and continue our digitalisation program, we are setting a strong foundation to contribute towards meeting the group's financial year 28 ambitions. Thank you to Heartland's shareholders and our New Zealand Bank customers for your support. I will now hand over to Michelle Windsor to discuss the Australian Bank.
Good afternoon, everyone. It's my great pleasure and privilege to lead the Heartland Bank in Australia. I joined the business towards the end of July, so I'll be taking more of a forward-looking approach today. But first, a little bit about me. I've had over 30 years' experience in banking, with extensive experience in Australia's major banks, but most recently, some more experience in smaller banks. My strength is in leadership, business growth, and a full understanding of the end-to-end process of our business. With that, I bring to Heartland the best of the big bank disciplines, coupled with the dynamic, customer-focused approach of a small bank. I'm very excited by the potential to deliver our best or only strategy to the Australian market, and I know that we have the capability and product offering to make a real difference. As you've heard, Heartland completed its acquisition of Challenger Bank on the 30th of April. Its existing businesses, Heartland Finance's reverse mortgages and Stockco's livestock finance, were then transferred into the bank, which was subsequently rebranded to Heartland Bank Australia. We continue to offer livestock finance under the Stockco brand. Since then, the focus has been on the integration and bringing together the cultures of these three businesses. And in doing so, we've identified and will continue to identify opportunities to remove duplication, improve processes, streamline what we do, and deliver faster time to service for our customers. These operational efficiencies will increase our capacity to do more. This includes ensuring we have the right structure in place to provide value and exceptional service to our customers, to grow as a business and to contribute towards the group's FY28 ambitions. We recently welcomed some new roles to the leadership team, including a Chief Commercial Officer and a Chief Technology and Operations Officer. These roles join the already existing strong executive team for Australia. A large part of process improvement will be through digitalisation and automation. This is, of course, part of who we are and what we do across the group. Our investment in digitalisation and automation is aimed at improving service delivery and enhancing the experience for our customers and our team. Prior to the acquisition, Heartland relied on costly wholesale funding to fund its Australian businesses. This was a key driver for obtaining an ADI in Australia. Transitioning Heartland Bank Australia's funding mix from 100% wholesale funding to predominantly retail funding is a key part of our ability to do more. Since completion, we have been originating and funding all lending through deposits on our own balance sheet, while wholesale facilities continue to repay. So we're well on track to meet our target of about 90% retail funding by the end of FY25. The benefits of this transition will flow through to improvements in Heartland Bank Australia's underlying CTI ratio and underlying NIM. We have had incredible success with deposit raising to date. In fact, Challenger Bank's pre-acquisition deposit raising campaign exceeded Heartland's expectations and gave us a good head start on our funding mix transition. This, of course, sets us up well to fund future growth expectations. We're working on opening up and diversifying our deposit distribution network, and we're developing new deposit product ideas to bring to market in the coming months. Similarly to the New Zealand Bank, we're focusing on keeping things simple. And this means focusing on our existing specialist lending portfolios of reverse mortgages and livestock finance before looking to expand into new asset classes. In the first half of FY24, livestock producers experienced one of the steepest and sharpest falls in livestock prices since the 1970s. This was the main driver for the decrease in Australian livestock finance receivables, which were down 103 million or 27.5% to 272 million. Receivables balances stabilised in the second half of FY24 as trading conditions and the volatility in livestock prices eased. In the last 3 quarters of the year, we actually saw an increase in the total number of livestock financed, up from 578,000 on finance at the end of September 23 to finish the year with 635,000 on finance at the end of June 24. Despite the extreme market and seasonal conditions that our StockCo customers have endured, the relatively low level of provisioning is an indication of the credit strength and resilience of the portfolio in the sector. As Leanne has said for New Zealand, livestock finance is very reliant on the weather. We've seen an improvement, however, to set ourselves up for success, we need to find ways where we can serve the needs of Australian food producers without such reliance on climatic conditions. In bringing the Australian businesses together, we've taken the opportunity to deep dive into StockCo and specifically how we offer our Australian livestock finance. We are adapting to the conditions we're operating within and the needs of the market to develop new livestock finance products and broaden our distribution model. We expect this to contribute to growth in FY25. When it comes to reverse mortgages, we have more opportunity than we currently have the capacity for. This is being driven primarily by Australia's ageing population. Our focus on process efficiency will enable growth and help us to serve more customers. In fact, we have already more than halved our time to service and hope to reduce this further over the coming year. Looking beyond FY25, Heartland Bank Australia is well positioned for growth. With the right structure in place and as we continue to bed in new ways of working, we have a great opportunity to expand our business and become known as a leading specialist bank. I'm incredibly proud of what we are achieving and the opportunity available for us to help more Australians with their specialist banking needs. Thank you for your time, and I'll now hand back to Greg Tomlinson.
Thank you, Michelle. Ladies and gentlemen, before opening the meeting for questions, I advise that Karen Shires of PricewaterhouseCoopers, the company's auditor, is present today and can answer any questions relevant to the conduct of the audit and the preparation of the content, the auditor's report for the year ended 30 June 2024. Shareholders joining online who wish to ask a question on Heartland's performance, strategy or operations can submit their questions through the online meeting platform now. We will aim to answer as many of those questions as possible. Any comments, questions or matters raised for discussion during the meeting must be relevant to the business before the meeting. If you have matters you would like to raise as a customer, the board and management can answer your questions during refreshments after the meeting. For those online, please submit any customer questions and we will respond after the meeting. Shareholders were also invited to submit questions prior to the annual meeting. We received several questions which I will address now. The first question was, are the board of directors concerned about the low share price of Heartland Group Holdings? Yeah, funny that. As I mentioned in my chair's address, the share price has not performed well, and we are focused on fixing this and maximising shareholder value. We believe we can achieve this through prudent capital management and focusing on the core areas of our business, where we can be best or only finance provider. This will be about keeping things simple and focusing on efficiency and enhance our return on equity. We received a question asking when we expect the last capital raise to be earnings per share accretive. Since completing the acquisition at the end of April, we are making good progress to integrate our Australian businesses and set the bank up for success in the future. As Andrew and Michelle have acknowledged today, an important part of this is the transition of our funding from costly wholesale to retail funding. We expect the Australian bank to be funded about 90% retail deposits by the end of FY25. We have made good progress and have already seen cost of funds lower by 2%. This transition will flow through to an uplift in margin and enhanced earnings per share. With that in mind, we hope to see the full impact of the recent acquisition in FY26. The next question asks if future segment reporting in Heartland's financials will be along the lines of New Zealand Bank, Australian Bank and parent company to provide a view of the costs and profitability of each entity. We have prescribed accounting standards that govern the way we report on our businesses, but we will continue to consider the best way to meet these requirements while providing clear and transparent reporting for shareholders. With regard to the parent company, Andrew discussed the role of Heartland Group and its change in focus, which is now much more clearly defined and narrow. The intention is to keep this team lightly resourced. As such, we will not be replacing the Group CFO role, and the role of Deputy CEO is no longer required. Other executives have also moved from the group to the bank. The group's role is providing strategic oversight of each bank, and managing capital allocation is critical to our growth and enhanced shareholder return moving forward. The final question asked, what progress has been made to address the non-strategic assets? Andrew and Leanne have both spoke to this matter with their respective CEO addresses. We have started work on strategies to realise these assets over a responsible period of time and will report on these separately in FY25. I will now open the meeting for questions, starting with those in the room, followed by questions online. For shareholders in the room who wish to ask a question, please raise your hand and then wait for a microphone. Please state your name before asking the question. If you have more than one question, please ask all of your questions and then resume your seat. We will answer each of your questions in turn. This will help to ensure as many shareholders as possible have an opportunity to ask questions. Okay, we can start taking some questions. Thank you.
Thank you, Chair and the CEO. My name is Xiao Yu, shareholder here. I would like to discuss regarding the operating cost. I'm not too sure whether OpenAI can be helpful to reduce the cost, and also the free and open source software. I'm a bit concerned that whether the group is wasting too much on proprietary softwares. And also regarding the amortization of intangible assets, I'm not too sure whether it's related to the group losing customers. The other thing is related to the presentation regarding the non-strategic assets. I'm not too sure whether they are undervalued, though they earn little or no income, whether they are too undervalued, and whether they have a great potential for large capital gain for the net assets in future. Thank you.
Thank you. And look, I will pass you over to Andrew for those to answer those questions. He's close to that information. Thank you.
Hi, is this on? Yes, this is on. So regarding your question around amortisation, sorry, there were a few questions there, so I think I'll hopefully cover them. But the amortisation question, that is purely related to the amortisation of our core banking system and other pieces of software that the bank or both banks operate. And we've signalled that that is intended, well, that will go up by about nearly 6 million per annum as a result of the core banking upgrade that we did. In terms of your question around NSAs, we're very much at the start of the process. We've obviously refined the selection and we've put the values out of these, well, the book values of these assets at the moment. They're very different. There are receivables portfolios, there are equity investments, investment properties. We own some farms, for example. So the realisation strategies and the value outcomes for each of those particular sets of assets will be very different. In terms of their value, we're not intending this to be a fire sale, but I wouldn't expect there to be too much in the way of capital gains over time.
Thank you, Andrew.
Andrew, AI, I think you said. Mike, do you want to take the AI question?
Yes. Thanks. Look, I think everyone's grappling with how best to use AI at the moment. We constantly need to balance the spend that we have in this area with the risk that comes with it. And the short answer is that we use AI at the moment in the applications that we already buy, but we're looking to use more of it as we progress, and we expect that that will help us achieve some efficiencies in the tech space going forward. Hopefully that answers the question, but please ask afterwards if you've got clarification.
I mentioned free and open source software instead of proprietary.
That's a complex question that I can't answer right now, so I'm happy to talk after the meeting. Thank you.
Thank you, Michael. Just thank you. Down here, please.
Jim Hamilton, shareholder. I'm just asking about your staff. Your staff, especially your frontline staff, who must be good promoters of the bank. I just wonder what you're doing to help the well-being of these people. Do you have social occasions? Do you reward people who have good frontline relationships?
Yeah, thank you for the question, Jim. So look, it's a very collaborative business with the people, and look, not that I'm, not that I'm at all the parties. I can assure you of that, but I know socially they work very well, and but where's Lana from HR? So she could give probably some further. She can expand further on that if you wish.
Thanks, Greg. So my name's Lana West. I'm the Chief People and Culture Officer for Heartland. We do a number of things with, I'll speak a bit louder, apologies. We do a number of things. So along with weekly events, such as providing breakfasts for our people, it's nothing flash, it's some bread, it's some cereals, etc. We have one of the youngest populations with regards to banks, so close to 50% of our people have an age which is less than 40. That encourages people to come and to mingle. We also have a number of diversity and inclusion events. So we celebrate Matariki, we celebrate Te Wiki o Te Reo Māori, We celebrate Diwali, and we also celebrate a number of other events. We have employee committees, so they get involved, and that includes growing families. We have a number of people that are either supporting into their young or also supporting at the older side of things. So there's a number of events that go on, and we do this right across the year, weekly through to significant events, and Christmas is also another time when we use it as an end-of-year celebration.
And just to add to that, we also provide confidential counselling through an employee assistance program that all staff and their family have access to as well. And that's both in New Zealand and Australia.
Thank you. Yes, in the front, second row.
Tony Skelton, and I'm a shareholder. The government have clearly signalled that they want to upgrade and restructure Kiwibank to the extent that they can compete with the existing 4 major trading banks in this country. If that comes about, I'm interested to know whether the board consider a restructured Kiwibank a threat or an opportunity.
Well, thank you for the question. Look, it's business, and we can't make their decisions, but we're very focused on the asset classes that we operate in, and we are best of breed in those asset classes. So, as protected as we can be, we are, and hence, this costly exercise of moving to Australia to get ourselves an ADI, and so it's painful at the moment, but it prepares ourselves for the future. So I think that's what we're focused. We're focused on ourselves, not on the competition. Thank you. Lana, over there.
Good afternoon, Roger Clark. Look, this question's to you, Greg. I'm sure you'll be familiar with the fact that EPS has been declining in the last couple of years to a very low level relative to what it's two or 3 years ago. A big factor in that, of course, was the deeply discounted capital raise you've just done. Do you foresee another capital raise at this sort of very low price? I mean, we've got the share price at a 10-year low, and I'm sure nobody here is happy with that. You talk about optionality in terms of Resolution 5, in terms of keeping your options open for some EPS accretive opportunity, but why should we trust you when you've had to issue shares at $1? And here we are 7 months after the capital raise, and the shares are still basically $1.
Well, look, the answer to that is we can't dictate the market, but to be fair, we've got a job to do to lift performance. So that's on us, and like you all here, we're shareholders, and so we wear it on our sleeve. And all I could say is there's certainly no way that we'll be raising capital when we've got non-strategic assets that are dragging the balance sheet. So we've got a pool of capital to go to before we go to the shareholders.
Okay,
so we're focused on getting back to a more positive state.
Okay, so thank you for bringing this around to non-strategic assets, because as I see it, 188 million is basically bad and doubtful debtors. I mean, you've dressed it up as non-strategic assets, but you're basically talking about receivables that you're struggling to collect. And why have you specifically sort of corralled those particular receivables into a non-strategic and tied it up in a nice neat bow and called it a non-strategic asset?
No, it's not all receivables. So we've got assets that no longer fit our strategy.
Yeah, but 188 million of that 217 million are receivables, so it's 86%.
Yeah, well, the books have...
So basically,
but these are books that are not working for us currently.
And
so we are very focused, like I say, we are focused on making sure we're getting accretive earnings out of our asset classes. So it's having a big overhaul.
Okay, so in relation to why you've corralled those into a sort of separate corner, were those receivables provisioned before they were put into the naughty box, shall I call it?
Can I answer
They're fully
that?
provisioned, yes.
I'll answer this. So the assets, or not just assets, well, let's talk about receivables, that we have pulled together is a combination of some business lending and rural lending that, as we said, no longer fit the the business writing strategy of what we have. Some of this lending is large lending that we no longer would write that business. They are performing loans. Where there are some non-performing loans, those were provisioned to prior to that. So this is the receivables component. There are equity investments. There are property investments. Those will take longer to sell down. Andrew mentioned that he mentioned some farms. We will need to get that production back up so we get a good price, good valuation. So this is not about creating a good bank and a bad bank. It is about removing distraction to say we can free up a pool of capital that we can then release and put back into asset classes that will generate a better return. So I hope that's answered your question.
Look, I'm just conscious of time here, and so we've got to move on to the. Sorry, I'll take one last question from the floor.
Thank you. Bruce Miller. Now I'm interested in the success really of moving the funding in Australia from wholesale to retail. I guess I'm intrigued why the directors of the previous company didn't adopt that strategy for a start. And then what sort of people are we getting on the retail side, geographically in Australia, and also the type of investor?
So I should hand that over to you, Andrew, I think, for that question.
I might hand to Michelle,
Okay.
specifically around the deposits, but I can cover the previous regime of why we have been wholesale funded.
Thank you for the question. So we have, we go to market for, we offer term deposit products largely. We have a couple of savings products. Our products are offered online, and they're very attractive to a large range of people across Australia. So we're getting a lot of investors, younger investors who are actually joining us. We're getting a lot of self-managed super funds and general population across Australia. There's not a particular segment that we are attracting, but it is actually opening up to a lot of people. Our pricing is very attractive, but it is a digital solution. We offer the solutions through broker networks as well, and so that attracts a lot of people through that channel. It's been very successful.
And the reason why the previous board wouldn't have done that?
Yeah.
This isn't something that's just happened. This has been something we've been working on and thinking about for the best part of 8 years, I would say. And we've looked at it every which way, from registering ourselves through to acquiring a big bank to getting on board with a bank that's in the process. And then finally, the Challenger Bank acquisition opportunity came along. So it's certainly something that's been on the radar for a long time. Wholesale funding has served our businesses for their state and part of the journey very well, but it was fair to say that they were hitting their appetite in terms of our funders for the asset classes that we fund. And so really the timing just aligned really well, but it's something that has been considered for a long time.
Andrew, can I just add, thank you for the question. I chair the Australian Bank and I'm a former prudential regulator, and I can tell you that they don't hand out banking licences very easily in Australia. There's a long process, and the reason why that is because, as we call them, ADIs, approved deposit-taking institutions, your banking licence isn't actually to lend money. A finance company can do that. Your banking licence is to collect deposits. And the reason why it takes so long is because those deposits are guaranteed by the government. So in the unlikely event that a bank was to fail, the government will stand behind the depositors and refund that money. So our reverse mortgage business and our livestock business in Australia operated as a finance company. We were not permitted to raise retail deposits. So we could only get our funding through wholesale means, where you borrowed that from other banks, but they would then benefit from the retail deposits, or we borrowed it from a range of different investors. But that was at about 170 basis points more expensive than getting it from depositors. So now, after some time, and we are required to operate at a higher standard than a finance company, because we are collecting those retail deposits from consumers and businesses and superannuation funds, as Michelle has said, but the government actually guarantees our performance as an approved deposit-taking institution. Thank you. I hope that answers the question.
Thank you, Jeff. And look, we're just conscious of time, so we've got to move on to the questions online. So first question, given the reduction in dividends paid by the company last year to shareholders and the board's intention to reduce the dividends paid from 55% net profit after tax to only 50% of net profit after tax, what must the underlying profit of 2025 be in order to avoid yet a further reduction of dividends paid to shareholders? Well, I think number one, we've said it's going to be 55% of NPAT, but Andrew, you're the finance guy. What's it mean in numbers? But all I can say is we don't want to be back where we don't want to be back here next year with this low level of earnings.
Yeah, this is like one of those intermediate maths questions I do with my son. But if you work it out on the pure numbers, it would be a 6 cent per share dividend on 900 odd million shares. That's 54 mil of NPAT. So times that by 2. Bit over 100 million of NPAT.
All right, so next question, please.
Thanks, Greg. The next question is, why don't the big 4 Australian banks offer reverse mortgages, and why have most of them exited the vehicle finance market? Is it partly because the process of foreclosure provides reputational risk because no one likes to have their house or car taken away from them by a financier? How do we manage the obvious sensitivities around this issue when loans don't perform?
Right, so
would you like me to?
I think Michelle, yeah.
Thank you. Well, I can't speak for the other banks as to why they do what they do, but I do know that the solutions that we provide peace of mind for all of our borrowers in Australia. It is a solution that people need. It does require your systems to work things differently, because the borrower doesn't need to repay the debt, the interest accrues. And so that it may be part of the reason why other banks have not expanded or not continued in this market. They did offer this product originally. And in terms of reputational risk, we work very closely with our borrowers. We ensure that they obtain independent financial advice, independent legal advice before proceeding with the facilities that we offer them. And we provide extended terms, so in terms of repaying the loans. The last thing in the world we want to do is to actually sell a customer's home. That's not what we wish to do. So we work with our borrowers and make sure that we are able to help them after the last borrower passes away. And they have extended time to actually repay the debt. They have 12 months to repay the loan after the loan is repaid. So we certainly wish to avoid any sort of reputational risk and work closely with all of our borrowers in Australia. In terms of the other part of the question is around car finance. Was it car finance? I know that a lot of the banks in Australia have moved out of vehicle financing, but again, I can't speak to why that might have occurred.
I can just briefly expand from a New Zealand perspective, and this once again plays to our best or only strategy, differentiating ourselves from other banks, providing an offering to customers that other banks don't provide. So we see this as an opportunity. As to why they don't see it as an opportunity, cannot answer that.
Thank you.
We've received a few more questions online, also about reverse mortgages. The next one, mortgage brokers have never been more important in the Australian mortgage market, particularly with the continuing decline in branch numbers. How engaged are we with the Australian mortgage broking industry, given that most of the big four Australian banks do not offer reverse mortgages? What proportion of future reverse mortgages in Australia are we expecting to come from mortgage brokers, and how do our direct sales of these products work?
So I'll pass that over to Michelle again. Thank you.
And Medina is going to get very close to a microphone to add in some extra detail here. We currently work very closely with the Australian broker market. We have 2,700 brokers who are on our books. We are working closely with those to build strong relationships. They are critical to helping us to help people to understand the solutions that we provide. What is our percentage, Medina, of broker and direct?
It's 50-50.
Oh, lovely. There we go. We certainly have a desire to work directly with customers in Australia, but the Australian broker market, broker industry, is incredibly important to us.
Thank you. And another reverse mortgage question. Does Heartland have a strategy for addressing possible increasing competition in the provision of reverse mortgages?
Maybe I can answer that one. That's why your shareholders have spent all this money getting an ADI in Australia. So we're going to be competitive. We are competitive.
On impairments, last half saw an unforeseen amount of impairments. Has this trend continued in the first few months of this half?
I'll pass this over to Leanne, please.
We're now at the bottom end of the economic downturn. And so we have seen, for provisions, we have taken the provisions that we need to support customers through this period. In terms of the late stage, we will continue to support customers. We're seeing arrears stabilise, but we are seeing companies and liquidations increasing, and that's across the New Zealand the industry. Particularly our business customers are finding it very tough.
And just a couple more questions online. Can you explain how the upgraded banking platform has improved your customers' online experience, and are you now positioned to offer new products on this upgraded platform?
I'll again pass this one to Leanne.
It sets a really strong foundation for us to accelerate our digital efforts. There's a number of digital enhancements that we've already implemented since we went live with our core system upgrade last November. There's a number of features to our mobile app that makes transacting and dealing with us absolutely seamlessly. In fact, one of the more recent rollouts is the ability for customers to catch up with either arrears payments or lump sum payments, flexibility into their lending, a range of self-service features, the ability to automate all of our communication with our customers rather than postage. So that set a really strong foundation, and this program work will continue for the next few years. This is where we will be able to manage our costs prudently. And we spoke about amortization of the costs for the core system. This is where cost reduction will offset that cost uplift for the payment of the system.
Thank you, Leanne.
The next question, during the new CEO search, what qualities of Andrew Dixon stand out over other candidates, and how do these skills align with the FY28 aspirations?
We should get Andrew to answer that, shouldn't we? So what I can say is, look, it's really down to the slimmed down role at the group level. And Andrew's been with the business for 14 years, so he understands that side of the business very well. He understands all the parts of the business, but particularly around the corporate finance side, capital management, etc. So why do we want to risk? We don't want to take too many stupid risks at this time of the cycle. So we're with somebody that's proven, is all I can say there. Thank you.
And the final question before we move on to the next part of the meeting. Are the $200 million of assets held for sale valued by accurate third-party valuations?
Yes, well, they are, yes. But we've still got to realise it, right? So a market's the market. What a valuer decides may not necessarily be in line with the market, but we will be taking a prudent approach as we liquidate certain assets. So thank you. Are there any further questions? No further questions. Okay, so thank you for all the questions. I will now invite Phoebe Gibbons to take us through the formal business of the meeting. Thank you, Phoebe.
Thank you, Greg. We now move on to the formal business of the meeting, which is to vote on the resolutions set out in the notice of meeting. As mentioned earlier, if you're attending online, you can cast your vote using the electronic voting card. Those online with questions about any of the resolutions can submit these online now, so they can be addressed with questions from the floor within the discussion of each resolution. The first item of business is the re-election of Kate Mitchell to the board of Heartland Group Holdings Limited. Details of Kate's background, qualifications and experience were included in the notice of meeting. Kate stands for re-election with the full support of the board. The resolution to re-elect Kate is an ordinary resolution requiring approval by a majority of the votes of those shareholders entitled to vote and voting. I'll now invite Kate to address the meeting.
Kia ora koutou and good afternoon to you all. My name is Kate Mitchell and I have been a director of Heartland Group Holdings since 2021. I also serve on the board of our largest subsidiary, Heartland Bank, New Zealand, where I have been a director since 2019. I am a member of a number of board committees, including the Heartland Bank Risk Committee and the People, Culture and Remuneration Committee, as well as the Group Audit and Risk Committee. I also chair the Heartland Group Sustainability Committee, which was established last year initially to oversee the preparation of Heartland's inaugural climate-related disclosures, but now to address additional matters relating to our social, environmental and governance responsibilities as an organisation. If you haven't done so already, I encourage you to take a good look at our climate report, as it contains some excellent insights about the specific opportunities and risks that lie ahead for Heartland in this domain. Like you, I am a Heartland shareholder, and I look forward to seeing all of our recent hard work reflected in due course in our share price. With a bachelor's degree from Oxford University, my professional background is in investment banking, having spent 20 years as a risk management specialist for global banks, including Merrill Lynch, Goldman Sachs, and most recently Deutsche Bank in London. After moving to New Zealand in 2014, I embarked on a new career as a business consultant and professional director. As well as Heartland, I am a director of the NZX and ASX listed business, the A2 Milk Company, where I chair the Audit and Risk Committee, and Christchurch International Airport, where I chair the People and Culture Committee. I chair the boards of Link Engine Management, a Christchurch-based automotive technology company, and the New Zealand Merino Company, a wool sales, marketing and innovation business. Heartland's journey to date has been characterised by taking the road less travelled, both in terms of the segments we choose to operate in, but also in the way that we engage with our customers in those segments through frictionless, efficient and cost-effective services. 2024 saw us continue to break new ground with the acquisition of Challenger Bank by Heartland Bank New Zealand, the first time a New Zealand bank has acquired a bank in Australia. This milestone sets us up for further growth, enabling us to offer our best or only products, such as reverse mortgages and livestock lending, to an even wider array of customers by emulating our successful New Zealand deposit-based funding model. Our priorities for the coming year, as you've already heard, include successfully completing the integration of Challenger Bank and continuing to grow our market share in reverse mortgage and livestock lending, relentlessly pursuing operational efficiencies throughout the banking business to reduce our cost-to-income ratio, honing our business writing standards and risk management approach to ensure we achieve returns above our cost of capital, and most importantly, attracting, retaining and developing our people in a way that continues to develop the unique Heartland culture. If we can deliver on these targets together, Heartland will be positioned extremely well for the future. I'm excited to have the opportunity to continue to offer my skills and experience to Heartland and look forward to working with Andrew and the management team across the group to execute on the opportunities that lie ahead. I would be grateful for your ongoing support for my directorship of Heartland, and I'm happy to take any questions you may have. Thank you.
Thank you, Kate. I move that Kate Mitchell, who retires and is eligible for re-election, be re-elected as a director of Heartland Group. Are there any questions from the floor? Are there any questions online?
No questions.
Please mark your intention on your voting card by selecting for, against or abstain at item 1. For those online, please click Submit Vote on the bottom of the voting card to lodge your vote. The next resolution is for the election of John Harvey to the board of Heartland Group. Details about John's background, qualifications and experience were included in the notice of meeting. John stands for re-election with the full support of the board. The resolution to elect John is an ordinary resolution requiring approval by a majority of the votes of those shareholders entitled to vote and voting. I'll now invite John to address the meeting.
Thank you, Phoebe, and Chairman Greg, and good afternoon, ladies and gentlemen. It is an honour and a privilege to speak to you today and to seek your support for my re-election as an independent director of Heartland Group Holdings. My first involvement with the group was as a director of Marrick. Soon after that, we merged with the Canterbury Building Society and the Northern Building Society to become Heartland Bank. Then followed listing on the New Zealand Stock Exchange, followed by obtaining a banking licence. We've come a long way since those early days and now proudly have a licence to operate in Australia as well. This growth has presented lots of opportunities and challenges, and I can say your board has always led with positivity and confidence. It has been a pleasure to be part of this growth path, and I know we will continue to evolve and grow in the future. As you will all be aware, we operate in a heavily regulated environment, and I have been integrally involved in assisting meeting our compliance obligations as we have grown in complexity. I've been a director of various group entities along the way through and have had active leadership roles in important committees such as Audit and Risk Management. I currently chair the Group Audit and Risk Management Committee, and I represent the group on the Heartland Bank Risk and Audit Committees. Prior to becoming an independent director, my professional career was with PwC for over 36 years and involved a number of senior leadership and governance roles in addition to my client service responsibilities. I had experience in a lot of different commercial sectors, particularly finance, and my directorship career has spanned some 13 years since these days, covering sectors including media, forestry, ports, investment property, retail, and of course finance and banking. As you can see, I have significant knowledge and experience of Heartland with wide-ranging professional experience to back that up. I have the time and enthusiasm to continue to represent your interests as Heartland Group enters the next phase of its growth, and I look forward to your support. Thank you.
Thank you, John. I move that John Harvey, who retires and is eligible for election, be elected as a director of Heartland Group. Are there any questions from the floor? Are there any questions online?
One question. As one of the 3 new Heartland directors, will John Harvey support putting up the Heartland remuneration report for a non-binding advisory vote at next year's AGM, complying with the legal system in Australia? Seeing as we are making such a big push into Australia, shouldn't we embrace Australian governance standards? If not, don't we risk New Zealand being viewed by international investors as a governance backwater, given that remuneration report voting has become standard in many countries?
It's a difficult one.
Yes.
Difficult one to comment on because we haven't actually addressed that as a board as yet. We will certainly meet all the reporting requirements we have, and in Australia is an important part of our operations overall, so it will be a consideration, but I can't really say much more at this stage.
perhaps I can provide some brief observations from a listing rules perspective. So the group is listed on the NZX as its primary market. We have a foreign exempt listing in Australia, but we remain conscious of Australasian governance best practices. This year, you may have seen in our annual report, we utilise the NZX reporting template for the first time, together with a number of issuers since that's been more recently published. And our intention is certainly to improve our remuneration reporting year on year. Are there any further questions online?
No further questions.
If you can please mark your intention on your voting card by selecting for, against or abstain at item 2. For those online, please click Submit Vote on the bottom of the voting card to lodge your vote. The third resolution is for the election of Simon Beckett to the board of Heartland Group. Again, detail about Simon's background, qualifications and experience were included in the notice of meeting. Simon also stands for election with the full support of the board. The resolution to elect Simon is an ordinary resolution requiring approval by a majority of the votes of those shareholders entitled to vote and voting. I'll now invite Simon to address the meeting.
Thank you, Phoebe, and good afternoon, everyone. I appreciate your time today as I seek election to the Heartland Group Holdings Board. Having known Heartland for some time, primarily as a competitor during my 30 years in financial services, I've come to deeply respect the company's commitment to innovation and customer service. This respect has only grown since joining the board in early June, where I've witnessed firsthand the dedication of our team to creating value for all stakeholders. As mentioned, I bring 30 years of experience from executive roles at GE Capital, Wells Fargo and Cerberus Capital. Much of this time has been spent building businesses or growing financial services businesses in Australia, which, as you've heard today, will be an important part of what Heartland does going forward. In addition, my expertise in mergers and acquisitions and risk management has been instrumental in navigating complex financial markets over time. I genuinely appreciate the ongoing support of you, our shareholders. It's vital to our mission, and I'm committed to ensuring that Heartland delivers on your expectations. Electing me means choosing a board member dedicated to transparency, accountability and sustainable growth. Thank you for your trust and support, and I look forward to continuing this journey with you.
Thank you, Simon. I move that Simon Beckett, who retires and is eligible for election, be elected as a director of Heartland Group. Are there any questions from the floor? Are there any questions online?
Could new director Simon Beckett and the chair comment on the recruitment process that led to his appointment to the board? Was a headhunter involved, and did Simon know any of our directors before engaging with the recruitment process?
Yes, thank you for the question. No, I'll answer that because I was, heavily involved here. Now, yes, we used a headhunter in Australia, and no, I'm not aware of anybody that had knowledge of Simon. Well, we certainly didn't as a board. So what I will tell you, and probably I'm racing ahead of Rob's presentation, but we went to Australia to find one director, and all I can say is the quality of people that we interviewed, we could not go past 2 of them. So I'm sorry about the expense, but it'll pay in the future. Thank you.
Are there any other questions online?
No further questions.
Please mark your intention on your voting card by selecting for, against or abstain at item 3. For those online, please click Submit Vote on the bottom of the voting card to lodge your vote. The fourth resolution is for the election of Rob Bell to the board of Heartland Group. Details about Rob's background, qualifications and experience were included in the notice of meeting. Rob also stands for election with the full support of the board. The resolution to elect Rob is an ordinary resolution requiring approval by a majority of the votes of those shareholders entitled to vote and voting. I'll now invite Rob to address the meeting.
Thank you, Phoebe, and everyone. Rob Bell, I was appointed to the Heartland board in just June this year. Previously, I was the founding CEO of digital bank, Smart Bank 86400. I led the building, the launch, the licensing, the scaling, and ultimately the successful sale of 86400 to National Australia Bank in Australia. I've also been in executive and chief executive roles at payments company Cuscal, Australian Unity Bank, and a long career at ANZ Bank in Australia, and also as CEO of ANZ Bank in the Pacific and ANZ Bank in Japan. Most recently, I was the chief executive of Flightboard, an Australian innovation, where I led the growth of that company into 90 countries before the successful sale to Brunswick Corporation, which is the owner of Mercury Marine. I'm currently a non-executive director of HFC Bank in the Pacific. I'm also a director of fintech payments company Manuva in Australia, and an advisor and the chair of the advisory board for a startup sports tech business called Live Heats. I bring deep digital experience, growth experience, and strategy experience to the board. I'm actually a very, very competitive person by nature and very performance-driven, and I love a challenge, particularly when it's competition against larger players. So the attraction of working with the Heartland board was very, very strong to me when approached. Heartland's growth strategy resonates with me, and I believe I can add a lot of value to the board and ultimately to shareholders, who I'm very pleased to say I've become one in the recent months. So with the board's support, I'd be very pleased to serve shareholders and Heartland Group going forward. Thank you.
Thanks, Rob. I move that Rob Bell, who retires and is eligible for election, be elected as a director of Heartland Group. Are there any questions from the floor? Are there any questions online? Please mark your intention on your voting card by selecting for, against, or abstain for item 4. For those online, please click Submit Vote on the bottom of the voting card to lodge your vote. This resolution is for the approval to ratify Heartland Group's placement capacity. This is Resolution 5 in the Notice of Meeting. As mentioned in Greg's address, at this stage, Heartland Group does not expect to seek further capital from the market unless we identify a growth opportunity that is sensible and beneficial for shareholders. Placement capacity ratification at this stage would preserve flexibility. The resolution is an ordinary resolution requiring an approval by a majority of the votes of those shareholders entitled to vote and voting. I move that the shareholders of Heartland Group approve and ratify for all purposes, including NZX Listing Rule 4.5.1c, the previous issue of 106,021,860 fully paid ordinary shares in Heartland on the 15th of April 2024, in accordance with NZX Listing Rule 4.5.1, comprising firstly, the issue of shares to investors at an issue price of NZ $1 per share, pursuant to a placement announced on 8th of April 2024, and secondly, the issue of shares as scrip consideration payable by Heartland Group for the acquisition of shares in Alex Corporation Limited. Are there any questions from the floor?
Hello, thank you. I think this is going to drag down the share price would, and also the share price currently is already not very high, so I'm not too sure how this benefit shareholders in general.
Thanks. Greg, would you like me to answer, or would you like to take that one? Yeah, so I think it's important that this is a backwards-looking resolution. This is seeking effectively to cleanse the placement capacity we used under the listing rules for our capital raise in April this year. This is not an indication of a further capital raise, and I think we've been clear through the speeches given today. If this resolution weren't to be passed, Heartland's placement capacity would automatically cleanse 12 months after the April 24 raise. So this is simply bringing forward the capacity cleanse to preserve flexibility. Was there another question from the floor?
Yeah, Roger Clark again. Look, in terms of efficient use of capital, I went on the website yesterday and look, this is in relation to whether you need to raise more capital or not. You've got, first, you're offering mortgages at 75 basis points above, this is residential mortgages in New Zealand, I presume, 75 basis points above your one-year term deposit rate. So you're offering 5.65 one-year mortgages and you're offering 4.9% for 1 year on term deposit. Now, look, why are you lending on such slim net interest margins in New Zealand that requires capital such that you're putting us in a position as a group where we're raising money at $1 a share at a 10-year low share price? And I understand the cleansing thing, and this gives you optionality in terms of raising more money, but why should we trust you to raise more money when you had to knock the share price down at an 18% discount to the volume weighted average price leading up to that capital raise, which similar level of heavy discount that Ryman and Fletcher Building had to engage in with all their shenanigans in the last 12 months? You know, why should we give you that optionality? I mean, you've disappointed us, is what I'm saying, and you're lending on such slim net interest margins. Maybe you need to knock the residential lending on the head and not use capital in that way.
Leanne, do you want to comment on the home loans component of the question, and then perhaps I'll ask Andrew to comment on the remainder?
So for the home loan portfolio, we did consider that as part of our non-strategic assets. We are doing some work on that. We've made no decision on it as yet, but the concerns you raise are very valid ones, and we've had multiple conversations at the board about that.
I'll just add to that though. We looked at what our opportunity was in the home loan business, the ordinary home loan business, not the reverse mortgage business, a few years ago, and we looked at it on the basis that we would have a set of rules around those loans, and they're very simple rules. We can lend to you as an individual. You turn up as a trust or a company, you don't get it. We lend in certain geographic areas, and essentially the whole process is an online process. So in fact, the cost attached to home loan lending is incredibly low. In fact, the marginal cost is basically nil. So we could do that at lower margins, and we basically essentially went to see whether or not there was an opportunity for us in that area. Okay, that was what it was. And if you think about the best or only strategy, what we were saying is we know we're not only, but could we be best by virtually having no cost? But there were a lot of limited rules around who could borrow from us, geographically, individuals versus anything else. And also it had to be an entirely 100% automated process, so there was no additional cost involved. We have concluded that it's not an area that we want to play in. We've still got the offering there, but in fact it is a non-strategic area, and we will be doing something about it.
Andrew, do you have any additional comments before we go to questions online? Okay. Are there any questions online, Nicola?
No questions online.
Please mark your intention on your voting card by selecting for, against or abstain at item 5. For those online, please click Submit Vote on the bottom of the voting card to lodge your vote. The final resolution is to record the automatic reappointment of PwC as the company's auditor and to pass the following resolution. This resolution also has the full support of the Heartland Group Holdings Board. I move that the Board be authorised to fix the remuneration of Heartland Group's auditor, PwC, for the financial year ending 30 June 2025. Are there any questions from the floor? Are there any questions online?
No questions online.
Please mark your intention on your voting card by selecting for, against or abstain at item 6. For those online, please click Submit Vote on the bottom of the voting card to lodge your vote. Voting cards in the room will now be collected. Please place your voting card in the ballot boxes as they are passed around. If you need help, please raise your hand. Online votes should now be submitted. Voting will be open until the close of the meeting. The results of the poll will be advised on the NZX and ASX after the end of this meeting. Ladies and gentlemen, that concludes the formal business of our annual general meeting today. I will now invite our chair to address the meeting.
Thank you, Phoebe. There is now an opportunity for any other matters that may properly be brought before the annual meeting to be considered. Are there any such matters that shareholders wish to raise? In the interest of time, we will now move to the online questions. There will be an opportunity to discuss any further matters with directors and executives after the conclusion of the meeting. Are there any questions online?
No further questions online, thank you.
Thank you. Well, that brings us to the end of Heartland Group's 2024 annual meeting. Accordingly, I declare the meeting closed. Thank you for your attendance and participation here today. You're invited to join the directors and management team for refreshments, which have been served at the back of this room. I kindly ask that we clear the room before 4:30 p.m. as there is another function taking place. Thank you very much for your attendance.